Today I'm going to be talking about TD mortgages. I'm going to go through all of the TD mortgage products and which ones might be right for you. Not the same product will be right for everyone. So I'm going to detail today if TD is a good company to go with for a mortgage and if it will fit into your lifestyle. So to get started with the process, I want to talk about what is really good about TD. So first of all, they have all different products for all different types of mortgages. Starting with fixed mortgages, TD has a 1 to 10 year term for fixed mortgages. So the fixed mortgage rates is basically a mortgage type where you have a set interest rate and a set payment for your entire term. TD's rates are very competitive, and they have a 1 year rate, a 2 year rate, 3 year, 5, all the way up to 10 years. So that's going to make their fixed product prime time for anybody that is looking for a set rate for a certain amount of time. And it's going to go by your risk tolerance. So if you have a very, very low risk tolerance, you're probably going to want to lock your mortgage in for the longest term possible, which would be 10 years. TD has a very competitive 10-year rate that makes it great for people that are looking for that stability in their mortgage. The next product they have is a 6-month convertible product. So basically, you get your mortgage. This could be for somebody that's flipping a home or something like that, but you get your mortgage for a 6-month term, and then you can convert that mortgage into a longer fixed term after the 6 months is up, or not, and sell the property. The third mortgage type is a 1 year fully open TD mortgage. The 1 year mortgage is good for people that are dealing with a builder and they want to get a rate hold. So if you're dealing with a builder and your house is going to be complete in a year, the 1 year mortgage may be for you. The next, and one of my favorites, is the 5-year variable rate. So in the 5-year rates, TD and all of the banks, for that matter, are the most competitive. So basically, they all are in a kind of a pissing match with each other for the 5-year rate. TD's 5-year variable rate is very, very competitive. The way the variable rate works is it fluctuates up and down with the prime rate. So currently the prime rate is sitting at 7.2%. TD's rate is a prime minus that 7.2%. So it could be 6.4% right now. The variable rates are awesome because you could lock that variable rate in at any time during the mortgage term with no penalty. The variable rate is very likely to go down over the next 12 months. There's an opportunity for people to save a lot of money on the variable rate. So remember, in a variable rate, your rate is always the prime rate minus 1% or 0.9% or whatever that might be at the given time when you get your mortgage. So if the prime rate goes down to 6.2% or 6%, then your rate would be 5%. If it goes down to 4%, the prime rate, then your rate would be about 3%. So people have saved a lot of money over the last 25 years by going with the variable rate mortgage. It's my absolute favorite because it does give you the most flexibility. Now, that being said, if you are risk adverse, then the fixed rate is absolutely for you. You should stay away from the variable rate. Currently at the moment, the fixed rates are a little on the high side and we're expecting a rate drop sometime in the next 12 months. So I'm encouraging a lot of people to go on the variable rate if their risk tolerance will allow for it. Next, and the type of mortgage I actually have myself. Okay, so TD has a product called the Flex Line. The Flex Line mortgage is a line of credit and mortgage all-in-one. So basically, you qualify for your mortgage amount, and if you have enough equity, TD will allow for a line of credit on there. The line of credit only goes up to 80% loan to value. That means you have to put 20% down to qualify for the home equity line of credit portion. And basically, as you pay down your mortgage, more line of credit becomes available to you at a very, very low rate. So that becomes highly beneficial for anyone that's looking at potential investments for the future, or they want to have a rainy day fund and use the home equity line of credit as a rainy day fund. It's a fantastic product. I encourage everyone to go with the Flex Line product that TD offers. Other banks also offer similar products such as Alberta Treasury Branch, Scotiabank, Manulife. TD has a fantastic product in it, and it's called the Flex Line. Now, there are some special programs that TD offers, and this is where TD is very, very diverse. They kind of have a product for anyone out there looking for a mortgage. I'm going to start off by going through a couple of these products with you just so you understand it. Please like and subscribe to the channel if you are down with finance. If you want to get good financial advice that's going to help you save money for your future, for your children's future, and become an overall better investor. TD does mortgage renewals automatically. So if you're a TD customer and your mortgage is up for renewal, then TD will renew your mortgage. TD is also willing to renew other companies' mortgages as well. So if you have a mortgage with Scotiabank or any other bank out there, TD will allow you to renew that mortgage with them. Next is mortgage refinances. TD is fantastic for mortgage refinances. If you find yourself in the position where you want to take some equity out of your property and refinance that property, TD is great for that. Our next product is the insurable mortgage. So TD does insured mortgages, and one thing that's fantastic about this is TD uses all three insurers. We've got CMHC, we've got Sagen, and we've got Canada Guarantee. Basically, if you're putting less than 20% down, you have to get an insured mortgage. TD makes it easier to get approved by having availability with all three insurers because they all have different rules and regulations that TD and all of the other banks also have to abide by. So TD deals with all three insurers, and you get a better rate on an insured mortgage than you do on a fixed rate mortgage. TD offers a military discount for mortgages. It's called the VA program. TD offers new to Canada mortgages. So basically, if you're on a work visa, a work permit, whatever that might be, and you have over 184 days left on your visa, TD will be willing to finance you if you meet a certain level of criteria. And I go through that in another video. So please like and subscribe to the channel if you want to know more info on that. The FHSA down payment program, this is the new program that the Canadian government came out with, is another one that TD works with. So you can open up an FHSA savings account. It's a first-time buyer account. And basically you can open that up right at TD, and they will use that program because it's all in-house in order to get you financed for a first-time home buyer and get all the benefits of the FHSA program. Conventional mortgages. TD does conventional mortgages. So some lenders do not do fully conventional mortgages. What that means is if you're putting over 20% down, some lenders will still charge you a CMHC fee or an insurance fee in order to get the mortgage through them. TD doesn't do that. So basically you can get a fully conventional mortgage through TD, and TD will allow you a little bit of flexibility on your debt servicing ratio. So if you want to buy a property that's a little bit higher than a regular pre-approved amount, then TD is the company to deal with for you. Please reach out to me anytime if you find yourself in that situation. I might be able to get an exception to help you qualify for more. TD is offering a cashback mortgage right now. They don't always offer the cashback mortgage, but it is available at the moment, and it is one of the products that most lenders never have, but TD does. So it is beneficial. So they have it right now, but call me anytime if you want to find out if they have that program available to you right now. TD does commercial mortgages through their in-house channel. So they have a whole commercial division set for commercial mortgages. This is if you want to buy an apartment building or build a building through the CMHC MLI program. CMHC does work with you in order to get those commercial mortgages in place. Another great product that TD has, and they don't charge their customers for, is a bridge loan. So basically a bridge loan is when you're selling one property and you're purchasing another property and the closing date is not on the same day. You need some money to bridge the gap so that you can qualify for the mortgage and take possession of your property. So TD does the bridge loans themselves. Smaller mortgage companies are incapable of doing the bridge loan because they just don't have enough money or are not willing to take the risk. Or they just don't have the facilities for it. But TD has a great facility for doing bridge loans. TD does mortgages on mobile homes on lease land. So mobile homes is something that's it's very difficult to get approved for because most lenders do not finance mobile homes. TD fully finances your mobile home for you, even on leased land. Some companies will only do it on owned land. TD will do it on leased land. Business for self. TD does business for self mortgages. So if you're a sole proprietor or if you are incorporated, TD is a great place to get a mortgage. They have special programs in place for people that are business for self. One of those programs is called the Stated Income Program, where you can kind of fluff up your income a little bit in order to qualify for more based on bank statements and your company financials. So these are for those self-employed people that don't claim a lot of money, and most self-employed people do not claim a lot of money. TD is going to allow for you to take some of the money out of the business in order for you to qualify for that mortgage. Mortgages on second homes is rare, okay? So TD allows for mortgages on second homes with as little as 5% down, whereas most lenders are still going to ask for 20% down. TD will allow for as little as 5% down on a second home. The second home's use could be for putting your parents in, it could be a lake property, it could be a property in the mountains, whatever that might be, you can get away with it with only 5% down if you qualify under their standard guidelines. Builder draw mortgages. Many lenders do not do draw mortgages. TD does it. So if you're dealing with a builder that is asking for a draw mortgage, then TD is definitely a place that you can go. There's only about 4 or 5 banks that do draw mortgages consistently, and TD is one of them. It's actually really the top 5 banks that are really pushing the draw mortgage. There is another thing called a completion mortgage where the builder will just ask for their money at the end of the build. Any lender will be able to deal with that. Only a few will be able to give you a rate hold. But if your builder is asking for a draw mortgage, TD is one of those places. So basically what a draw mortgage is you get money in stages. So the builder might put the foundation in and then they might go and ask for a draw so that they have proper cash flow going through in order to get the job done for you. And spousal buyouts. It's sad, I know, but if you're breaking up and you have a mortgage with TD, or you're getting a divorce or separation, whatever that might be, and you need to buy your spouse out or your significant other out of that property, then TD has a spousal buyout mortgage where you're allowed to finance up to 95% of the property value. So that means you have to leave 5% equity in there. So it would be like refinancing a property or purchasing a property with 5% down. You can suck all the equity out except for 5% of the equity. So to do that, TD would get an appraisal on the property, we'd find out what the property is worth, and then we would pull the money out. You need a separation agreement or divorce agreement in order to do this. This is completely yours in the end, but TD does do the spousal buyout program, and it's awesome. So let's talk about some of the pros and cons of TD's mortgage offering. So one of the pros that I think is just fantastic is TD does rate negotiation. And you want to get a lower rate, TD will sometimes offer some negotiation room. So basically you offer 5% and TD will say yay or nay, or they'll say this is the maximum we can go up to. Basically what I do in the background for you is I negotiate on your behalf. So I'm always asking TD for those rate discounts for my customers. And the discounts that I get are often way better than what you can get going into a branch anyway. So give me a call and I can help you with negotiating your rate with TD. They have very flexible payment options and very flexible prepayment privileges. So as far as payment options go, you can go weekly with TD, you can go monthly, you can go bi-weekly. Whatever fits your lifestyle, that's what TD wants to do. They want to make sure you're making those payments. So, for example, if you get paid every 2 weeks, then you're going to ask for a bi-weekly payment. If you get paid every week, you might want a weekly payment. Depends on what you want, but TD can do that. So it's very flexible payment options. TD allows for a couple of prepayment privileges. One of them is called a lump sum payment, where they allow 15% lump sum to be dumped down onto the principal per fiscal year. So it's really great if you get like a big fat tax return or something like that every year, and then you just want to throw that down on your mortgage to pay that mortgage off faster. TD doesn't penalize you for that. So let's use an example. If you've got a $100,000 mortgage, TD will then allow you $15,000 per year to dump lump sum. The next thing that they allow you to do is they also allow you to increase your payments every year with no penalty. And you're allowed to increase your payments also by another 15%. Call me if you have any questions about this. Let's say your payment's $100 a month. You can turn that $100 a month payment into a $115 a month payment. And you can do that every year in order to pay the mortgage off faster. A lot of my clients do that just to bang it out. So they'll get an initial mortgage payment on a 25-year amortization, so 25 years to pay off. And then after, what they'll do is the next year, and I encourage this, is they'll increase their payments by 15%. They'll get used to that payment, and then the year after, as their salaries increase, like most people, that your salary may increase over time, then they would increase by another 15%. So let's talk about some of the cons of TD. It's not all roses out there. There's cons to every single bank. And I'm going to go over some of those cons with you right now, just so you have a real understanding. And then at the end of this, I'm going to summarize everything and tell you the secret tool that I use to pay my mortgage off faster. So one of the cons of TD is they do collateral mortgage. So basically what they do is they put a charge on your title for a specific number. And you're allowed to put that charge, I believe, up to 115% of the property value. Basically what that does is it makes it hard for you to leave TD on renewal. So a lot of our customers, basically what they do on renewal is they will come back to me and they'll say, Sean, what's the best rate you can get for me? And then I'll go to the open market and I'll say, okay, these guys are offering this, Scotiabank's offering that, Bank of America is offering that, whatever it might be. And then I come back to them with the rates. And if they don't accept that rate, then they're going to have to pay out a small fee to TD because the collateral mortgage is on there. So I discourage going with a collateral mortgage if you can avoid it, okay? But talk to me about that. It is an optional thing on the TD mortgage commitment, but I find everyone signs the collateral charge, and you don't have to. TD has a really high interest rate on auto renewals. So for example, if your mortgage is up for renewal in 5 years from now, TD is going to offer you a rate. If you don't sign off on the new mortgage commitment rate, then your rate is going to automatically go into prime plus 2%. That's the rate that they're giving at the moment. It might change over time, so don't quote me on that, but call me on that if you have any questions. So the rate, if it auto renews, will be very high. So make sure you don't allow your mortgage to go into auto renew. Make sure you negotiate with TD, and I can negotiate on your behalf. So just give me a call if you have any questions about that, instead of going and letting it auto renew. TD also has mandatory in-branch signing. This is an area that I get a little bit frustrated with, because you sign your mortgage commitment with us and then they still want you to go into the branch and sign something off with them in branch. It's not 100% necessary. Most lenders do not do this, but TD does this because they want you to open a bank account with them. They want you to get a credit card through them. They want you to get a line of credit. They want you as a TD customer once they approve your mortgage, because you're already vetted if you were approved for a mortgage through TD. So they want you to come in branch. It could be a huge waste of time unless you actually want to go in to branch and talk to somebody. TD doesn't really have a real home equity line of credit product other than the Flex line. So for some people, they just want a separate home equity line of credit. They don't want it attached to the mortgage in any way. That's another limitation that TD has. TD has very strict credit requirements. So if you don't fit into their kind of box, then you don't fit in with them. But that's why it's better to come to me. I'm an independent mortgage broker, and I can shop you at all of the banks so that we're not just limited to one single lender. So if you don't fit in with TD, then we place you somewhere else that you would fit in. I am the easiest way to get approved for a mortgage. TD does not have a B division or a private division. So if your scenario or your credit or your down payment is not just right and doesn't fit into TD's box, they don't have an option for you. That's why it's really important to come and see an independent mortgage broker so that we can get you approved if TD can approve you. TD also has constant turnover in staff. That's why I recommend, if you are getting a TD mortgage, that you come and see me. I've been doing this for a long time now, and I'm here to stay. So when you deal with us, you always deal with me directly. You're not pushed to a different representative. Their turnover rate is really high. So I know it can get frustrating. You walk into a bank, you deal with one person to set up your mortgage. Then you go to call that person or email that person a question, and they don't work there anymore. They left to another bank or to become independent or whatever. So that's one of the limitations that TD has, is that their staff turnover is high, and the new people may not have all the right answers. So it's better to get your mortgage through the broker channel over doing it in the branch. TD also has really expensive mortgage life insurance. So what I do when you do a mortgage through us is we go and shop around everywhere for your mortgage life insurance. You're not limited to just TD's mortgage life insurance. And we come back to you with the best rates. So you do save a lot of money when you're dealing directly through an independent broker. So overall, I highly recommend TD as a mortgage company, and I've been doing this for a very long time. They have been very, very stable over the last 20 years and will continue being stable going into the future. They're not limited in any way by funds. They've got tons of cash, so they can approve tons of mortgages, and they are flexible. TD is definitely a way to go, but I do recommend you do the mortgage through us on the broker end of things. If you're going to go with TD, you're going to get better rates and you're going to get better products that are suited to your needs, and you can still deal with TD. My name is Sean Rampersad. My number is 780-278-4847. Please like and subscribe to the channel. I look forward to talking to you.